Hey all, welcome to ShareTreck. Today is February 18th, 2022, and the markets are mixed as usual. There's a lot of volatility, and I'm trying to calm my mind because there doesn't seem to be an end to this volatile trading market. And in order to have some sanity, I'm just dipping into my old toolbox and looking at what I got. And I thought I'll just share my thoughts with you. So that if any of you are in the same situation that I am in, which I suspect you are, you could probably find something useful in what I'm talking right now. And this is not going to take more than 5 minutes. And once this is done, we'll look at the technical analysis and the indices and finish our session for today. So the first thing that comes to my mind is that I would have a fight or flight instinct, which is normal when we start seeing the red creeping all over the portfolio, and most of our shares looking like they have been in a bloodbath. That's where the term, I believe, comes from. So as we see red and the losing position keeps on stacking up and emotions start to take over, we get into a fight or flight kind of situation. And that leads us to do some knee-jerk reactions like selling off shares. I remember in the early days of my trading, I bought some cannabis shares because I thought that it was going to do great. And initially, the markets went up and it went up 200, 300%. And I made some profits, and then I started putting more money into it. And then they started to fall, and they fell very rapidly. And I got scared, and I took off all my money. And the very next day, they went up again. It was just a brief blip. It came to the bottom. I got left behind, and it went back up. And after that, I haven't touched cannabis shares at all. Ignoring entire segment of market is not a good thing. So sooner or later, I'll have to get back into it. But at that point of time, it was my fight or flight instinct that came into play, and I did a bit of emotional trading. It takes a lot of practice to avoid emotional trading. Because your convictions can be deceived by all the euphoria around you and the news item in the market and the greens arrows going upwards. The second thing is greed. So taking risk beyond capacity motivated by greed is what creates a situation where when the markets are all red, we start doubting everything, and we get into trading with a lot of fear. First it is greed, and then it becomes fear, because due to greed we take trading to levels which are beyond our ability to handle. We take improper sizes of trades. For example, I keep on telling you that when the markets are going down, we could take advantage by dollar cost averaging. But while dollar cost averaging, you have to keep an eye on how much portion of your portfolio you have allocated to a particular share that you're dollar cost averaging, and stay within your limits of risk taking. That's what I tell myself when I think about dollar cost averaging. That's why in the last few days I have very rarely used that term, because right now I do not know what is happening with the market, how low it can go. So I'm being very careful about dollar cost averaging. Finally, we have to recognize that there is no shortcut. And there is no shortcuts for making money in the market. It's our money. We cannot invest because someone else said so. We cannot invest because somebody else did the research. We need to educate ourselves on the tools and techniques of investment. We need to do our own research about the companies that we are planning to invest in. And we have to choose the right entry and exit price. Now, all of these looks very good on theory when I'm saying this. Even for myself, I have experienced that even if I keep this at the back of my mind, when I'm actually trading in the market and I see the movements in the market, the news articles and all the people on television talking up a particular stock and all that, it's very, very difficult to stick with the plan of the entry price that we are going to get in and the exit price at which we want to come out. Like if we decide that you're going to buy a share at $25 and you're going to get out when it touches 30, the problem is when the share price approaches 30, we start feeling that probably it will go up a little more and we need to hold on. And this is how we get latched onto the roller coaster and we move along with the price, and then it comes down. And then when it comes down, we feel, oh no, it will probably turn around and go back up again. And as soon as I get anywhere close to 30, I'm going to come out. But the moment it touches 30, we change our opinion. This is what happens in the early stage of investment. And then as you start learning, I found that I myself started having this discipline. It's very difficult to get, but I do exit when I'm close to my target, and I buy when I'm close to the target. So I've convinced myself that I cannot time the market. All I can do is manage my expectations. So if I thought buying at 25 and selling at 30 was good enough profit for me, that concept should not change because the share price is going close to 30. So it's very easy to say these things, but in practice, while doing it, I have found it very, very difficult. But that's what we need to do. And I have used a few mechanisms to cope up with this. It doesn't succeed always, but I do have some of these tools, and I hope you don't laugh at this. One is to use the time to learn some new indicators or other things on the chart to learn more about technical analysis, which can be useful. It kind of takes my mind away from the market, and I'm looking at something else, and it reduces the anxiety levels. The other thing is I just open a spreadsheet and I put trades in there, depending on what I thought I would have bought. Instead of putting my actual cash in there and placing a trade order, I just simulate that on a spreadsheet, wait and see what happens. And that's what I did with Tesla yesterday. I wanted to buy Tesla at 28.10 on the Canadian side, and I wrote it on my spreadsheet that I have bought say 200 of it at 28.10. And this morning when I saw the markets, it was at 27.10. So if I had actually put my money into it, I would have lost $1 per share. That would be around $200 less right now. So doing a paper trade instead of actual cash, and identifying a new sector and getting familiar with it. Because let's face it, we are looking at CRISPR day in and day out, and looking at it again at this point of time is even more painful. Agreed that some shares are positive today, but if you look at the overall time frame, it's been a steep drop and it's keeping on dropping. And what is green right now would become red by evening. We have seen that play the last 4 or 5 weeks. So I, for one, am looking at other sectors right now and trying to look at their entire chart and see where they have fallen. And there are some shares which have fallen spectacularly in really, really strong sectors. So I'm looking at them, and that takes the edge off the market that's happening right now. And the other thing I'm also doing is I'm looking at my REIT sectors. So I have got Ryokan Investment, Ryokan, which is a Canadian real estate investment trust. So I got a lot of units of Ryokan, and they're doing spectacular. They have increased in profits. I bought them at the rock bottom of the market some 6 or 7 months ago, and they are doing very well. Plus they give a monthly dividend. So I'm looking at all of that, and I'm trying to appreciate the glass half full mentality. And that's how I'm trying to manipulate my mind in order to not do any knee-jerk reaction, not to sell something like crazy, or not to unreasonably dollar cost average and get more into the problems. I have $10,000 set aside to buy on dips, but I'm going to wait and watch, and I will do that only when things seem to be appropriate. So enough about all these psycho babble. Let's go on into the market, look at the indices, and then look at the biotech shares and take it from there. Okay, so now enough of the doom and gloom. Let us look at the market and see actual doom and gloom. So here is our VXN, and as you can see, what I have done is I have drawn a green line which kind of connects all the lowest lows that we have seen so far, that is since 31st of December 2021. And I've got this red line which connects all the highs that we have seen on the VXN since 21st January 2022. So 24th January 2022. So it's sloping downwards, and today's candle is here. This green candle out here is today's candle. So we had gone up and then we have come down slightly. We are at 33.97. That is up 2.29% from yesterday's close. So that's where we are. And as a result, NASDAQ is down 1.2%. And I have this line which I had drawn in the morning, but it seems that that was not the right place to be. So let us look at this possibility here by connecting these two lines. Originally, my line was drawn by connecting these two. So if you see this green point here and this one here, so what has happened now indicates that things are getting bad. So I'm going to remove that line for now. We'll see where this ends, and then we'll try to reconstruct a support line in the bottom to kind of guide us where the NASDAQ is going. So if we zoom out to a 1-year view or a 5-year view, let us see. Yeah. So if we zoom out to a 5-year view, we can see that we have already dropped from our peak out here. Let me just grab the scale measurement tool and then go from there all the way to here. So we are down almost 15%, 16% from our peak. So that's a lot. That's a correction. And we seem to be going down further because the MACD is bearish and the momentum is falling. Let us go to the 3-month time frame. Even in a 3-month time frame, the MACD is falling and MACD is bearish and the momentum is almost rock bottom. And if we go to a 1-day time frame, we can see again the MACD is bearish and the momentum is very, very low. So things are not looking good for NASDAQ. As we can see. Now let's go on to have a quick look at our biotech shares. I'm just going to sort this out. And Regeneron is at the top with 0.38 gain. Novartis is next with 0.6. Pfizer is next with almost a flat reading. So if you look at the top 3, they are all companies which already have drugs and medicines in the market, therapies in the market, which are giving revenue streams, and they're all dividend paying. And if you look at our non-revenue generating companies, which are our CRISPR companies, they are all in the red. So at this point of time, it doesn't make much sense doing a technical analysis on any of these shares, honestly, because the market is gripped by fear. The Ukraine tensions are definitely there, and there are a lot of other issues which will come into the forefront when the Ukraine issue is resolved. So it's something that that's going to be difficult to quantify. Now let me show you a new tool that I was looking at that I've put in the indicators out here. Put call ratio. So this is the put by call ratio that we have. And if you look at the reading out here, it is 1.14. Anything above 0.7 is supposed to be bearish. So we are very, very bearish when you look at it from the put call ratio point of view as well. If you look at the VXN also, the VXN has got spiked. The MACD is bullish and the momentum is high for the VXN. That means the volatility is very high, which is going to be negative for the indices. So if we look at our S&P 500, again, you can see that S&P 500 is dropping down in front of our eyes. It's down minus 1.81%, and the MACD is tending towards the signal line, and the momentum is falling. So it's not looking good in S&P. If we look at the Dow Jones Industrial Average, again, Dow Jones is down minus 1.55%. And our momentum is dropping in the RSI, and our MACD is also turning towards the signal line. So everywhere we look, that's what is happening. Yeah, that's about what I have got for today. QQQ is again a proxy for NASDAQ. It's also dropping, and we see the momentum dropping. We see the MACD moving towards the signal line out here. So that's the situation. Now let me go to NASDAQ and look at one more aspect. Let us go to the 5-year view. And if you look at the 5-year view, or maybe let us look at all-time view. Yeah. So if I look at the RSI, the most the RSI has dropped was 25.71. And right now, we are still at 56.72. So if the market were to drop, it has got plenty of scope to drop down. Now let us look at the 5-year time frame. So if we look at the 5-year time frame, again 27.53 is where we bottomed out on the RSI. This is the area. Look at my cursor. This is the area where we were at the bottom on RSI in terms of momentum. That was 26.52, and right now we are still at 36.67. So there's plenty of way we can go down in the RSI. So in terms of bottom, there's plenty to go, and we have a support which is the 9-day EMA, which is this white line. So that's another support that's available to us for the Nasdaq. But overall, things are looking bad, and there is no point dwelling further into it. All I would suggest is that just hold on to your wits, do something else. If you can't stand it, just shut down the computer, go into Facebook or Twitter, engage in a spat somewhere, or do something else that interests you, binge watch something on Netflix. So do something else, stay away from here, so that you don't do unforced errors. So that's about it from you, my friends. I may seem a bit low energy today because I'm feeling low energy from the market, and I'm trying my best to manage it, but this is the best I can do. Thanks, and have a great day. If you can bring yourself to it, please put a like there. If you're here for the first time, do the good deed for the day, subscribe. Have a great day. Bye for now.